Welcome back to Fast Stock Market News, where I give you all the news as fast as I can. Yeah, guys, thanks, and welcome back to the channel. If you enjoy the content, consider subscribing, liking the video. I would greatly appreciate it. So as you can see, the S&P 500 finished negative 0.58 in the red. The Dow finished negative 0.75 in the red. And NASDAQ finished negative 0.26 in the red. And the Russell actually finished in the green today. And there's some very interesting trends that I wanted to get to in this video, guys, that I've been noticing. Very interesting indeed. I wanted to talk about Elon Musk, and I'll get that toward the end of the video when as far as Twitter goes. But as you can see, the Russell finished 0.8 in the red, and that's very important. And also that the Dow finished 0.75 in the red. So if you guys remember, when you have a lot of us that were investing, well, some of us that got started investing during the pandemic, a lot of us were buying these Cathie Wood stocks, whether that be like Tesla or Roku, Zoom. All these stocks were pumping so hard. And Cathie Wood was actually the first ones to get dropped when we had a sell-off. But as you could see this week, Cathie Wood's ETF ARKK is actually outperforming most other indexes right now. And it's very interesting because first it was Cathie Wood that was getting hit. The first sell-offs were Cathie Wood. Then the next sell-offs were in the Russell small cap and mid cap stocks were getting sold off. Look at this week. This week, the Russell's actually up 1%. And then after the Russell, we started seeing tech stocks get hit. More like significant, like big cap, like the Facebook, Meta, Amazon, all those stocks were getting hit. So as you can see, they're down negative 1.72%. Then after that, we started seeing the SPY get hit. The SPY started to get hit. And as it stands right now, the SPY is very close to being in a bear market. I think it's like 1 or 2 percentile away from being in a technical bear market. And it's very fascinating how this is kind of like trending out. And then the last one that's getting hit right now, from my vantage point, and this is just my opinion, I feel like the stocks that are getting hit the most are the Dow Jones. And the Dow Jones has very, very safe, boring stocks like Walmart and Target. These stocks are in the Dow Jones, and those are all the ones that are getting hit massively right now. These are like the bluest of the blue chip companies in the Dow. And right now, as you can see, like they're actually the ones that are like selling off. Meanwhile, the ones that were getting hit first, like when this sell-off started, ARK, it's like starting to recover. People are starting, hedge funds are buying these, but simultaneously, all you're reading in the headlines is that the market is crashing and this is the end of the stock market. Everything's bad. Stock market down slides, Target tumbles. It's just a bunch of very bearish sentiment. But for us, retail investors, a lot of us have like these smaller cap plays. We don't really have like the blue chip like companies. We do, but not to the extent that Wall Street might have these companies. So it's very fascinating that I just want to put that on your radar, guys, that how stocks that are in the ARK, and I'll give you a good example of that one. Let's put like, for example, Unity Software, a big holding, very high conviction Cathie Wood. Unity is up 11% today. This is a holding in Cathie Wood's ARKK fund. As you can see, Unity is actually doing great, but look for the year, they're actually getting hammered. But it seems like the worst is behind them, and this is just my opinion, not financial advice, but I think these high growth Cathie Wood stocks might have bottomed already. And it's very interesting to see what's happening because their valuations have come down massively. Look at this company where it was trading at just in November. It was $189. Now it's down to $41. And Unity is actually a good company. So that's just something I want to keep an eye out, guys, to see what's happening right now in the market. So you guys can just be aware when you do any kind of trading out there. The big thing in the stock market is actually Elon Musk and the Twitter deal. It apparently, yesterday there was a rumor or a statement sent out to the media that Elon Musk said that the Twitter deal was on hold. But today he kind of emphasized that the Twitter deal is still proceeding. Executives tell the staff, and that caused Twitter to kind of pop up a little bit. Still very far away from it where it was before he actually decided he was going to buy Twitter. Remember, guys, he's proposing to buy Twitter at $54.20, and it's a long way from $54.20. He might be renegotiating the price, but yeah, let's hear more information on this whole Twitter fiasco that's happening with Elon Musk.
Elon Musk's bid for Twitter may not actually be on hold. Execs at the social media company reportedly telling employees the deal is proceeding as planned, that they won't be renegotiating the price of the purchase. This just days after Musk said the deal was on pause. Shares of the social media platform popped as much as 4.5% on the news. End of the day higher by more than 1% here. Karen, I mean, I don't know what people were expecting Parag Agrawal, the CEO, to say.
Right. I don't know
at a
if
lower price. I mean, that'd be nuts.
That would be crazy. He's doing the right thing. He's saying, look, we have a signed deal, and you're working towards that deal. There is no such thing as pause, especially for an issue that, if it were that important to him, he could have negotiated a very, very clear sort of containment about the number of bots. He didn't. They revealed it in their SEC documents. So I don't think he's got any legs to stand on, except for he might be the only bidder there. But there's no way the board should cave now. No way.
Bonawyn?
They won't cave, but the thing is, this thing could still get caught up in a long, protracted litigation or settlement, which means that it still gives some wiggle room for investors, shareholders, to not want to deal with the back and forth. So I totally agree with you and Karen. I mean, what other position is the guy going to take besides saying, listen, you signed it, you bought it how you saw it, this is what it is. But it doesn't mean that you can't see continued volatility in the stock price, and that's ultimately what viewers care about.
Guys, that's my quick, fast stock market news. Thanks again for watching. I'll see you guys tomorrow. Take care, everyone. Thanks again, everyone, for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow, guys. Take care.